one of the primary goals you have as an entrepreneur is building a valuable company, right? Everybody wants to build a big, successful, meaningful, impactful business. And so what you're working on essentially is the enterprise value of your business. And as you do that, I think people sort of often think about one side of this equation and not the other. And so let's talk about the equation itself. For public companies, they all have what's called the PE ratio, price earnings ratio. And it basically is if we take the earnings of the business, which is the profitability of the business, and we multiply it by some number, that equals the value of the business. For startups, usually because most of them don't have earnings, it's revenue. So startups will say, well, my revenue is X million dollars, and then it gets multiplied by something else, and that turns into your valuation. I think the default is just 10, right? Like in the very earliest days, most entrepreneurs would assume they should get 10x whatever their revenue happens to be. It doesn't always work like that. In fact, frequently it doesn't work like that. But that's kind of what they think the number on the right-hand side would be, and then they just don't worry about it. They tend to just like, let's go back to revenue. Let's grow revenue, grow, and they don't really worry about the multiple. I actually think companies should spend a lot more time thinking about that multiple because that's where you get leverage. For every dollar you make in revenue, it gets multiplied by something. And so if that something is 2, it's not the same as if that something's 20. And so what goes into the multiple? There's a few things. Number 1 is gross margin, which we've talked about before. Number 2 is the growth rate of your business. How fast is it growing? Not just how much revenue is it going today. That goes into your multiple. I would say there's also differentiation. Like, is this a differentiated thing? Are there a lot of companies that can do what you do, or are you one of the very few businesses that can do what you do? I think strategic fit with other businesses, like if your plan is to get bought by somebody, how important is it to them to buying your business? I would also characterize danger. Like, how dangerous are you to other companies? Like, if you were to succeed, how dangerous is it to some large incumbents for you to succeed? What part of the market are you occupying, and is it a problem? Because honestly, one of the reasons companies get bought is because they're a problem, and that sometimes gives them, or even more so, what is it? Would it be let's say you have 2 large incumbents in your industry. If incumbent A bought you, would it be dangerous to incumbent B? Because that can lead to some real fights over your business. In my case, most people don't know this with AdMob, and we talked about that exit. I'll talk more about it later. But going back to the earnings point, the ratio point, when AdMob was acquired for about $800 million, our revenue was $40 million. So we had a 20x multiple on revenue because we were sitting in a very strategic place. And it would have been dangerous for, there was a sort of a bidding war essentially between Apple and Google, and one of them didn't want the other one to have it, right? And so that ends up creating a much higher multiple than in the case where it's something that is sort of like, well, it's fine, it's a cool business, but like doesn't really make a big difference. We had gotten to a place in the market that was considered to be strategic because it was growing, it was important, and somebody was going to have it and somebody wasn't. And so I think these are things that companies can think more about and actually can, do scalable work in terms of thinking about how you are going to create enterprise value in your business. Don't just think about the revenue side. Think about your growth, think about your margins, think about your cash velocity. How much cash does it consume and how much cash does it produce? Because if you're in a business that just is inherently going to grow really quickly because you don't really need much cash to do it, and every dollar you make turns into $2 the next day, that by itself is a pretty cool business to be in. And then, lastly, just think about, what does your business mean to all the other players in the industry, and is it something that they just need to have strategically? Because that by itself can create real enterprise value.